Okay, so what's up, guys? Today I'm gonna show you guys how to identify a fair value gap. They're really very simple, not too difficult. So basically, let me see if I can get the Okay, so let me show you guys how to do it, right? So you would draw 3 candles like that. Right, you do another one right here, like that. Then you would draw another candle like that, right? So these are the 3 candles, right, that you would draw. Now, this will be considered a bullish trend because, as you can see, it's going up. Okay, now how you identify, right, is, let me go ahead and put one here. That's one, that's 2, that's 3. So 3 candles, right? So the middle thing is the body. The middle of the candle is the body. And the long line is considered the wick. Okay. Now, for those of you who don't know, this whole thing, the wick and the body together, right? This whole thing together is considered oh, that's weird. Typed it out and it didn't even show up. Yeah. So this whole thing together is considered a candle. The middle of the candle is the body, and the lines that extend from the top and the bottom are known as wicks. Okay. Now, that you guys know that, what we do, right, is what we're gonna have to do is we're going to basically draw a line from the wick of the first candle, right, as you can see, and then we're gonna grab the line from the wick of the third candle, right? See that? Let me move this out of the way. Right? the wick of the first candle and the wick of the second candle and the third candle is considered a fair value gap. Okay. Now, if I eliminate this, go ahead and erase that for you guys too. If there's gonna be occasions where you would see something like this, right? Notice how this wick is just too long and it kind of touches the first wick. So you would basically do the same thing like you did the first time. You draw a wick, you draw a line from the first candle and the line from the second candle, right? Notice how it overlaps with this candle and they both touch. Notice how this candle and this candle, they touch, right? This is considered invalid, right? It's invalid. Why is it invalid? Because the two candles touch. There have to be a gap. Okay? There always has to be a gap between the first and the third candle. Now, let's say for example, the second candle, let's say that one draws all the way down here and does something like that, right? You see how this candle goes all the way down here, and you see how this candle, this wick right here, see how that one goes all the way over here, right? It touches both of them. You see how that, no. Right, you see how the second candle goes all the way to the first candle. You see how the second candle goes all the way to the third candle. Yeah, it doesn't matter. It really doesn't mean anything. What matters is always the first and the third candle. So you can literally have something like this. See that? Even if this candle's all the way down here, even if this candle's wick is all the way down here and this candle's wick is all the way up here, as long as this third candle's wick here and this first candle's wick here doesn't touch, then it is considered a valid fair value gap. Okay, so this would be a valid fair value gap, and then you would basically wait for price, right? If it's a bullish, sorry about this. Anyway, so if it's a bullish trend going up, right, what you would do is you would basically wait for price to come back into this fair value gap to enter and continue up. So notice how I drew a fair value gap from the third wick. Let me see if I could get like. Okay. Notice how I drew a rectangle in between the first wick and the third wick. You see how I drew a rectangle right in between that. Now notice how you would wait until 3, 4, everything after the third candle, as you can see 4, 5. Notice how fifth came into the fair value gap. As soon as it came into the fair value gap, you would enter and you would continue to buy. Okay, so it would be something like, as soon as it come in here, right, you would enter. But you would enter. Looks like my trade, but you don't want to work today. But you would wait for price to come back down into. Let me change the candles of this one to maybe green. Okay. Yeah. So first candle, second candle, third candle, connect the wicks from the first candle and the third candle like this. Draw a rectangle in between, and you would wait for price to come back down into that fair value gap, right? And then you would enter the buy to this high, and then continue it up. Okay. Now, now you would do the same thing, the same exact thing for a bearish trend. Okay, same thing for a bearish trend. Okay, so okay, so you would basically get 3 candles again. Let's say 3 candles going down. Let me make it red. Make it red. with so this is a downtrend. This is a bearish trend. Where would the fair value gap be? You guessed it, from the first candle. This is the third candle, right? Notice how this one and this one never touched. So this will be considered a fair value gap because it's going downhill. Let me go ahead and put the 1 here. And this is the first candle, that's 1. Second candle, that's 2. Third candle, that's 3. Alright. So that would be considered first and third. This will be considered a fair value gap. Okay. Now, what are we waiting for? So we would wait for price, right? So let me delete this one and draw the box right here. Right? Basically, same situation. This is a fair value gap. You would wait. You would wait for candles to come into the fair value gap right here and then continue back down. Right, so this is 4. This is 5. This is 6. This is 7. So you would basically wait after the third candle. You wait for the fourth candle or the fifth candle to come into this fair value gap here. That was drawn from the third candle. I should probably change the color of that so you guys can see it better. Let's say bullish candles, Cynthia bullish candles. You wait for them to come back into here. You would wait for price to come back into here. Right. So you wait for price. These are the fair value guys between the 1 and the 3, right? You would wait for price to come back into here, and then you would sell all the way down to take out this low. Okay, or just continue to sell. Now that you guys have seen it, play over the video as much as you can so you guys can understand it. But now we're gonna get into the nitty-gritty of things and actually go find some on the chart. Okay, so let me pull out the chart for you guys So everybody knows when you're trading, you have to go to the nearest time where price is at right now, right? But for the sake of this video, we're just gonna find as many fair value gaps as we can on the chart. Okay, this is the 1 hour chart, and let's go. So off rip, we see price doing what on the 1 hour chart? What do we see? What do we see? Where do you see the price going right now? Right. When you see this, you see price going up. Like, we're just using common sense, right? When you look at this, what do you see? Price going up. Like, just staring at this, what do you see? It's going up, right? So we're gonna find fair value gaps here. Okay. Another way to see if trend is going up is really this. I'm gonna make a video for trend, but just for the sake of the video. Alright, just for the sake of the video. Just for the sake of this video, we're just gonna go about it just because we're only looking for fair value gaps, right? But this is the high, this is the higher low. This higher low took out this higher high here to form this high. Then formed another higher low. Then this higher low took out this higher high to form this high. And now it's making a higher low to take out this higher high, right? So we're gonna look for fair value gaps in just this trend up to find entries, right? And we're only gonna use the 1 hour chart. So off rip, right? What do you guys see? The first thing I see is, you see this? This candle, remember 1, 2, 3. 3 candles, right? You draw the rectangle, right? What do you see? 1 touching this wick right here, and then 1 touching, like basically 1, 2, 3, right? 3 candles. Notice that there's a gap in between them. Now, what did the other candles after the third candle? Let me see if I can draw a 3 right here. Well, whatever. But notice how this first candle right here, remember, because it's going up, so we're gonna look for bullish fair value gaps. So this is the first candle. This one in the middle right now is the second candle. Let me see if I can put the 2 right here. It's the second candle. Then this one up here is the third candle. Right? 1, 2, 3. Right? Now remember the wicks. This is the wick here, and this is the wick here. We're not worried about the one in the middle. We're gonna draw the rectangle in between those wicks. Now remember those candles that's after it. 4, 5, 6, 7, 8. Notice how every single one of those candles came back in. You could have entered at the 5th candle right here. Alright? You could have entered at any of these candles, honestly. Every candle that went back into this fair value gap, you could have entered. So you could have entered right here. And what you could have done to be safe was enter, let's say you entered here, right? The first candle that touched. If you wanted to, you could have put the stop loss here, but to be safe, you could have put the stop loss down here at the bottom of the first candle. Then you could have had it up here, right? But the ratio, the auto all will probably be in 0.65, so it would have been low, right? But if you wanted to, you could have a 1 or 2, This is a 1 or a 1 1. Just to be safe, this could be a 1 or 3. Like just like that. It was every time. You could have entered here. That's how you identify fair value gap. We could look for more fair value gaps. Look, boom. What's this? This is another fair value gap. We could put one here. One here. Remember, we're looking for bullish candles. That's it. What's it? 3. That's the third candle. So the first candle is this red one right here. Then the second one will be this third candle right here, which is this blue one. And then the third candle will be this one here. So what you do is you do the same thing. You grab from the bottom of this wick right here, right, to the third candle. So the first wick to the third candle right there, right, and then you stretch it out. Right. Notice how the first candle right here, wick, and this wick don't touch, right? The first candle's wick and the third candle's wick don't touch. We're not worried about the second one. Now peep how as soon as price went up, it came right back. You're waiting for that. You're waiting for price to come right back down into this fair value gap, and you could have entered again. Put the stop loss below this. Simple, easy. Every time, do that. Every time. That's why it's always gonna do that, because you're looking for a bearish. In this situation, price went back down, but it doesn't really bother us, right? Because the high time frame trend says we're looking for bullish fair value gap. So you would leave this trend going down alone to look for more bullish fair value gaps. Like right here, this is the last one I'm going to show you guys. What is this? 1, 2, 3. So you would draw from the start of this bullish trend here to this up here, this third candle here, third candle wick, and then you stretch it out. Look what price did. This is 1, this is 2, this is 3. Look what price did. Went all the way down here into the fair value gap and then flew off. So you would enter here going up. No, it always does that because it's in a bullish trend. Okay, now let's look for bearish trends. Okay, honestly, because of the fact that we could use this. We could use this downtrend because it is going down. We could use this mini downtrend. Let me see if I can pull out the can. This is like a mini downtrend. Right? Alright, so we're gonna look for fair value gaps in this lower downtrend right here. Okay. Let's look for fair value gaps. Is there any fair value gaps in any of this one? Right? Is there any? Is there any fair value gaps here? Honestly, no. These wicks are always touching. Remember the 3 wicks. Let's take 3 wicks right here. 1, 2, 3. See how these. Let me see if I can zoom in. Let's take these 3. See how this wick here and this wick here. See how these wicks touch. The third 1, 2, 3. See how this third one and this first one, they touch and overlap like that? That's not a fair value gap. Looking for fair value gaps. We can't use these 3. You see this big red candle, this blue candle, and this red candle. See how the wick on the first candle and this wick on the third candle touch? Can't use that. Just looking for fair value gaps. Looking for fair value gaps. Looks like everything's touching. Even though it's going down, everything's touching. You know. We can use this mini fair value gap here. See this 1, 2, 3. What we can do is, because it's so tight, we could draw from the first candle. See, first candle, second, third candle, and pull it out. Let me see how I can. It's very tight, but if you can see this first candle, this second candle, this third candle, notice how price went back into it. It's okay for price to go all the way up as long as it doesn't pass this right here, the first candle. This is the first candle. As long as price doesn't pass it, it's okay. You'll still be valid, and you would enter this sell. Right, your stop loss would be above this first candle right here, and this, you know, and then you would enter the sell. You gotta make sure you're not in this for too long. So if you could be in here for maybe back down to this this liquidity area around here, you know, before you get taken out. Okay, we could look for another downtrend like this one right here. It's a downtrend, so as you can see, we're going down, right? So where's the fair value gap in here? See, we could use this fair value gap right here. I just so used to this that I could just spot them off rip. Like this right here, see, 1, this red candle here, 2, and then this third candle right here. So you would start from the first down candle to the third candle, and then you stretch it out, right? And then you would have enter, waited for, you could honestly, you could have entered from this here right here, the first candle that touched into the fair value gap. You would put your stop loss above the initial first candle, and just to be safe, and then you could have either a 1 or 2, 1 or 1 if you wanted to play safe, or if you're one of those 1 or 3. See price hit, because it's in a downtrend, it's gonna hit. You know, that's a nice little fair value gap. You know, as you get better, you can even stack. So you can wait. So if this is down here, your target, what is this right here? Another fair value gap. See, 1 candle here, 2, 3. I will stretch it out from that candle to here. See, first candle here. This is the first one. See how the wick is open. Second candle is nothing here. Nobody's worried about the second candle. Then the third candle, see how this wick is all the way down here, and the first candle's wick is all the way down here. You draw the rectangle, and then look, you could have entered here again. You could have waited for price to come back into the fair value gap. Sold here. You could have stacked. They call stacks, where you can enter basically again when you see another move. So boom, you could have entered again back to your same target. Put the stop loss up here at the initial first, well, you could have done the first candle if you wanted to, or you could have done at the fair value gap. Because I'm so experienced, I can just put it right above here and continue, or I could just put it above this candle right here and just wait. Notice how I never came back up until my target got hit, and then it went back up. Like they always do it. Same thing over here. They're small. You gotta look for yourself, but they're very small. As you can see, another move is, notice how this price is going downhill. So just this mini scalp, like literally this mini one right here, could have got you some money. Where would you guys see the fair value gap here? You can see it, as you can see, look, let's come back down. See this 3, 1, 2, 3. See that? Okay, so I'll draw this rectangle into this third candle right here. I'm sorry about that. Draw it all the way out. See, the first candle I found with the fair value gap. See, 1, 2, 3. The third and the first wicks don't touch. I stretched out the rectangle. Then I could have, as soon as price went back up here, take my stop loss, put it above that candle right here, the first candle. Let's say that I put it above the first candle. Then I could have had another entry, which is a 101, or 1 or 2, or where did it go? All the way to the 4. So it could be this could have been a 1 or 4 easy sell. This could have been over what, 88 pips. You know, like, this is easy, guys. It's not hard. You just gotta practice. And the way it works the most if it's in a trend. So notice how this is a downtrend. I would enter sell. I'll only enter sell fair value gaps. You know, what else? Notice how this, on the other hand, is a bullish trend, like it's going up. Notice how it's going up. So I would only take buys. Fair value gap here, I would enter here and then take a buy up. In this scenario, it went back down. I would ignore all this and wait for another entry to continue the trend. So like in this case, fair value gap, peep how it just came right back into it and then flew up. So I would only enter when there's it follows the trend. When is the best time to get it? So people would say, now how would you know which fair value gap works, right? Well, it's because of liquidity. I want to make a video about this. Since this video is all about fair value gaps, I don't really want to get into it. But because these equal lows got hit underneath the fair value gap, it hit the fair value gap and then it flew up. You know, so liquidity got taken out first before it continued the fair value gap, okay? But this is how you identify fair value gaps. I'm going to make a video on liquidity soon so you guys can see it. Thank you.